All right, ladies and gentlemen, I hope you're having a wonderful weekend. Today, we're going to talk about long-term investing. So I want to go over some of the basics. I have some key factors, and this is going to be an introduction. I'm going to make a few videos on this topic, and I'm even going to do an experiment where I'm going to open up a brand new long-term portfolio to create for you guys. And I'm doing this now because we hit 50,000 subscribers. Shout out to you guys. I love you. Thank you for everybody watching the videos. Make sure you subscribe. We're live Monday through Friday, 30 minutes before open. But no, and because I want to show you guys that it does not matter when you start. You know, I already have a very good long-term portfolio, and some people think it's very unattainable. I want to show you, documented on YouTube, I could start one right now from scratch at the all-time highs of the market, and you could still turn this into something great. And the key is, with long-term investing, you don't know. All you got to do is, in the words of Warren Buffett, you got to know what, not when. That portfolio will grow faster than you think. And it's crazy. You know, here's even a 10-year chart of just the S&P 500. You could pull up a bunch of companies, but even what's just even happened since 2016 is still just tremendous in terms of percentage gains. You know, we're not even talking dividends or anything like that. So I'm really excited to share this with you guys. I'm going to go over some key factors about long-term investing. And again, this is just the first topic. We are leaving out some of the dividend aspects, but I have made a video on that in the past. So you guys, I really strongly encourage you guys check it out. I will make some other ones. And then I'm going to go over 3 long-term stocks that I think are very good for the long term, and I'm going to use these when we make the portfolio to show you guys what we're doing. And 1 out of the 3 I already own in my official long-term portfolio. So let's get right into it. Here is the document I have prepared for you guys, and here is the official quote. The best time to plant a tree was 20 years ago. The second best time is today. The next thing, this is another key factor you guys have heard me say. I really want you to memorize this. Little amounts of money over long amounts of time. That is the key. When it comes to long-term investing, it does not matter how much you have. It's very paradoxical. People think you need a lot of money to invest. You do not. All you need is a lot of time. There's many examples. $1,000 in Amazon from 1997 till today, every $1,000 turned into about $2 or $3 million. McDonald's from the 1960s, every $1,000 turned into $5 or $6 million, paying $30,000 a month in dividends. And again, that was 40, 50 years. There's a bunch of stories. Google from 2007, Facebook. I mean, you could go down the list, but it's really, I promise you, it does not matter how much money you have. It is using a strategy, understanding how long-term investing works, and executing that plan. And this is the real reason why I'm making this video. We have a lot of trading videos on this channel. We're talking about day trading, option trading, all this stuff, and I do that. But what allows me to do that is I've always had my money working for me literally since I was 14 years old, over 12 years ago. All it took, and you guys are going to see, it's one of the keys I have, all it takes is to be right once. You only need to get rich once. You only need one of these companies. You only need to catch one of those stories, and it would change your life forever. And I really want to set you guys up with that. And this is why I tell people, if you're day trading, you already have money to blow to a degree. Even if you're like, oh, I'm trying to make a living off of this, I have a small amount of money, you're going to blow that amount of money anyway. If you make a trade and you lose it, that money's gone. You better have a plan, or you might as well have a plan to set aside some money. It's better to just keep 20 bucks, 100 bucks in somewhere that wouldn't be lost, and then lose the other $20 or $100 somewhere else trying to trade, and you'll be good. But it's better to do that than you know, spend your time working, sitting in front of a screen for years and years at a time. And after a few years, if you just lost your money trading, or you're going up and down, maybe you'll make what? You double your account after a year or two. And then all that while, you could have just parked that same amount of money into one stock or a few stocks, and it would have done a lot more for you, and you probably could have got a job and done anything else. Now, I'm not trying to discourage any of you from that. I'm not at all. All I'm saying is go ahead, trade, do your thing. And there's a lot of damage you could do trading, positive damage, but make sure you have a long-term portfolio. Here's an example of what I'm talking about, and I said this in a live stream, and I wanted to show you. This was a car I used to own, an awful investment, but look at the caption, and this was September 15th, 2014. You know, and this is what we had people, when we were first doing, we had people, we had a sign-up service. We don't have that anymore. People could join and do all that. But one thing I always preached was long-term investing. And, here's the caption. It's the same thing I'm saying today. I said this 5 years ago, if you took this advice then, you would have made enough money to purchase this car. If it put, $5, $10, $15,000, what some people were trading with, if you just stuck it in there into one of these stocks and just held them. So again, when people talk down on real long-term investing, all I have to do is say thumbs up, because a lot of people, and this is the point, again, why I'm making this video for you guys, is that it's not sexy what I'm going to show you here, or even in general, when you have these people saying, oh, you're going to make this much money, you're going to work from home and do this, and literally all of this different stuff. They're going to sell you a service, sell you this, they're advertising, you're seeing their strategy on this, sign up for this brokerage, and all you have to do is literally make an E-Trade account, a Thinkorswim account, anything. And again, this is a brokerage, even a Robinhood account. Put your money in there and pick a few of these stocks and treat it like a bank account, and that's it, and forget about it. So all of this, please keep this in mind. I know it seems like a lot of talking and this and that, and some people don't like that, but I'm telling you, it is the mindset to this, because this is the next point. It is not so much about as quote unquote investing or fundamentals as much as this is common sense. Most people fail at this because they do too much. They're looking at this too much. Either they'll look at their accounts, or they're responding too soon, or they don't really want to put in this effort to really know what it is. And it's not really an effort of, and again, this goes back to what I'm saying. It's not, if you sit in front of a screen every day, and that's the paradox of investing. You could put thousands of hours clicking, that does not equate how much you're going to make. You could literally be passive, be a dummy about it, put money, set and forget, and that's it. So again, it's more of the mindset and understanding this common sense. And this is why I'm trying to talk to you guys and tell you this, because a big portion of this is literally Shark Tank at a bigger scale. That's all long-term investing is. Some of you guys will be following me or sitting in here. Again, you're willing to pay people thousands of dollars for some secret sauce. The secret sauce is common sense. There is no secret sauce. I do not have any secret sauce. Nobody has any secret. Easy, accessible information and being intuitive and knowing how to put it together. But if you have common sense, it will go a long, long way. So moving forward with this, here are some of the key factors for your investments in selecting a long-term stock. And again, I'm going to go over the 3 stocks I want to cover and that I will be purchasing here. But one, do not listen to what other people think. So very paradoxical, because guess what? Don't listen to what I think, right? Take that with a grain of salt. I mean, read Richest Man of Babylon, Intelligent Investor. I really suggest you take Richest Man of Babylon. People who do this, you guys will notice. Go talk to anybody in investing or anybody who has a successful company. People like to share what they've done and if they're good at something, and they like to share it for free. Yes, you could pay people to manage your money, and that's the next thing. There's a big difference than that. Asking somebody for advice or asking to manage money. You could ask me, hey, what should I do? I'll give you advice if it's convenient for me. You come on stream, I could talk to that. Yeah, if I'm with my family, I'm eating at a restaurant, I probably don't want to talk to you, honestly. A lot of, again, and that applies to anybody. You see a guy pull up at a restaurant, whatever it may be, versus, hey, manage my money. I'm not going to do that. Some people will. They'll say, hey, yeah, give me your 20,000, 50,000, 100,000. I'll manage it and I'll take a fee. That is a completely different story. But this is the key, is that a lot of people, this seems too confusing, or it seems like it's just overall intimidating. And a lot of people don't like looking at this and thinking about it. So they pay people to do that. I don't think you need any of that. I think as long as you make your own account, you're pretty much good to go. Again, it's very simple stuff. But what I mean by don't listening to other people, I mean analysts. I mean people's opinions on stocks. When, again, I'm going to share some of the stocks I have, and this is why I pick my long-term stocks, is that people are always going to disagree with you. Some people agree with you. You'll say, hey, I like this long-term stock. And people are going to say, no, they suck, this and that. Literally, everybody is a genius. When everybody has an opinion on everything, and this is what I'm trying to tell you guys, they don't love you, okay? They don't care about you, and they will switch sides and act like nothing happened after years. Examples in the market is Amazon. They used to say Amazon spent too much money. I bought Amazon. They said, no way they're going to be profitable. Jeff Bezos spends too much money. They even said the same thing about him in 2000. They're going to go all day and say, oh, it won't do this, it won't do that. They said Facebook would never make money and Facebook wasn't going to last. And then at the minute the costs get too high and mobile advertising is fake and it's not going to last. They said Chipotle is just burritos. Who's going to buy anything of that nature? It's just a fad. They all say that. They all say that for literally, they don't say it once. They don't say it twice. They say that for years. And then they switch sides and I'm like, oh, it's the greatest company ever. Yeah. Like, oh yeah, we were wrong. We love it now. So again, if you want to get some of that stuff, these are the key factors I'm sharing with you guys so you could take advantage of it. And if you know how to select these stocks, and again, we're going to really dive into this topic, but this is part of the first thing, is that use common sense with some of these companies. And if it makes sense that it's going to be there and it's going to be a sustainable company, who cares what your Google search brings back? They don't determine the future. They don't care about your finances in that sense. So keep that in mind. The next thing now, the next key factor is, what do you use and will you continue to use it? It is all about sustainability. If you have ever heard me say any of this stuff with long-term investing, it's just simply select stocks and companies that you think will be around here for 10 years, 15 years. Again, it's not as much as some people are like, oh, well, is it going to make money? Is it going to be this? Who cares if it makes money? I know it sounds very paradoxical. This could be probably the worst investment advice you've probably ever heard. Please consult with a financial advisor. None of this is investment advice to begin with, educational purposes, yada, yada, yada. At the end of the day, it's kind of viewing it very, very basic. This is what I'm saying, common sense. If a company is a growth stock to begin with, it hasn't established itself for 50 years like Coca-Cola or Hershey's, the fact is, if it could stay around for 10 years, that's going to be a good sign. And again, using a little bit amount of money and time value, if it could stick around, it'll be good. But then again, what I'm trying to say is, a lot of you guys could see what is going to be big. And then when it already is big, it's like, oh, how'd I miss that? Think about Amazon. All of the stocks I mentioned above here, Amazon, Facebook, Chipotle, you probably used or witnessed them, and you witnessed the fad, and you could have easily said it would have been around here in 10 years. Most of you had your Prime membership, if you're a real Amazon OG, since 2010, if not earlier. I know I've been a Prime member since 2009. I could have easily, I've been a Prime member for 5 years by the time, we went long on some of those shares. Like, duh. You saw it happening. You were using Facebook. You were always on Facebook. You were eating Chipotle, or you saw people eating Chipotle. Even stocks like Starbucks that have been around for a long time, you saw even as social media, and it became, bigger and bigger. Lululemon, you saw these, God bless them, all these beautiful women wearing all of these Lululemon stuff. You saw it blow up right before your eyes, and it's not like you saw it and then the stock price shot up. No, you actually saw it year after year after year after year, and then the market actually lagged. And now that's what you got to realize. It's not about when does it blow up, but it's what. That's what Warren Buffett says. It's about knowing what, not when. Here's the story that Warren Buffett always said. They asked him, Warren, do you want to know when you're going to die? He said, no, I don't care about that. And they said, why? What do you want to know? And he said, tell me where I'm going to die. He's like, I don't need to know when I'm going to die. As long as you tell me where I'm going to die, I'm not going to go there. And that was his analysis for avoiding risk. And it makes a lot of sense, because he says it's about what, not when. So as long as you know what's going to happen if you go to a certain area, just don't go there. You'll never die. It's the same thing here. If you know this is going to be around, and this is something a lot of people use and like, and you use it, that's all you need to know. Go buy it long, a little bit amount of money, and you set a plan, you'll be good to go. So that's the biggest key, is just finding something and saying, will it be here in 10 years? The next step is diversify, okay? Because the key is that now, and this is, I didn't include step 4 here, I should though, but you have to have a long-term plan to execute this. So what I mean is that little amounts of money over a lot amount of time is that all of you, if you want to get about long-term investing, you can do $50 a month, $20 a month, $100 a month, and just put it into a long-term company. Now, I've always said long-term company, singular, but realistically, you should diversify it, and you should set up, just have a plan. As long as you have a plan to put in X amount of money a month, or even in general, and just hold it there for for a long amount of time, 10, 15 years, I could almost with certainty say you will be very successful. You will be left with an amount that you will be okay, that you'll be happy with. I don't think you will ever regret it. And the key is, though, too, don't put it in just one company. So I'm going to share these 3 companies with you, but it doesn't mean, and this is why I'm bringing up these 3, and this is when I do this experiment and I start creating this portfolio for you guys, I'm not going to just buy one company. Sometimes with you guys, I've said just buy this, buy this, buy this, but understand you got to diversify. The key is that they aren't all going to work out. You see, you use the common sense, you use what you use, find sustainability, but you could always be wrong. I mean, again, nobody knows, and that's the key. That's why I said don't listen to anybody, because nobody really knows. But the whole point is diversify. Not everything is going to be the next Facebook or Amazon. You only need one of them to hit. So just spread it out and pick a few. And again, let uncertainty and time do its thing. But that's the first 3. Now let's talk about my 3 favorite stocks. These are the ones I'm going to be buying. Out of all of these, the only one that I own is Redfin right now. And now I'm going to go over these. It's the 3 stocks I want to buy, and here are 3 favorites of mine. To give you a general idea, I'm going to give you some explanation, a little bit of risk, and kind of show you some context with some of them. But Snapchat, Redfin, and Spotify. So the first one, I always say this, Snapchat. I really, really like this one. I could see it being around for 10 years because of the younger generation. And what I mean by that is a lot of kids use it. They don't use Facebook as much. I think Facebook will be around there. They own a bunch of apps and stuff like that. Again, you could even invest in Facebook too. Again, it doesn't mean that now stocks that have already blown up, again, it doesn't mean that you can't go in those, because if the same thing applies for Amazon, Facebook, that you could get into those and it's the same exact concept, believe it or not. I'm going for a certain level here of different type of growth, and that's why I say here it plays its own role in the portfolio. I like this as a real extreme growth pick, and that's what I'm saying. By diversifying, you could spread this out over, again, 10, 15 years, but every single one of these companies is going to hold and do its own thing. But Snapchat is one where it hasn't blown up, it hasn't grown yet, versus there is other companies like Facebook is a good example that it has the sustainability, and it's been there and it's going to do good, and you could really hold it, but it's already gone up 15, 20 times even since I've purchased it myself. So I like them, and I think Snapchat is great. And the risk, I think, is they run themselves into the ground or people lose interest. And what I mean by this is that I think the product will be here for 10 years. Why wouldn't it not work is if the company just isn't good. And what I mean by that is if they just somehow manage it poorly and they never ever turn a profit ever because they spend so much money. Evan Spiegel becomes, a crackhead and starts tweeting all the time about the shorts going after him. Sound familiar? But, think about it in that sense. But here's something I show, this is the filings. I'm going to show you the filings of Snapchat and Facebook, but this is Facebook's 2013 quarterly, or their 10K, and you could see, their net income over years, and this is what people worried about. They made at one point $229 million, then $606 million, then $1 billion, but then they dropped one time to $53 billion. And this is where people got really, really concerned. This was, again, from their IPO, and there was all these other factors, and then it came back up, and they were all over the place. And again, the same things people said with Snapchat is what they said with Facebook back in the day. But now here, coming to Snapchat's filings, you could see now 2016, 17, 18, their net loss. They this is in thousands, but $514 million is what they were losing. Then $3 billion, then to 1.2. But you could see it's going from small loss to big loss to small loss. But it's eventually if they could become profitable. But this is what makes Snapchat a lot different than Facebook. But again, if Snapchat can't turn that around in the next few years, that could be good. But again, it's clearly, fundamentally, and I'm not going too deep into the fundamentals here because, again, that's not the point I'm trying to highlight here. But the point is, eventually, just like Facebook, it had a hiccup time. It had points where it was still undecided, but the minute they begin to prove that, then it could be good. But that's one of the ones I like. I think Snapchat's great, and just because, again, I like it, and I think it plays its own role, like I said, because it is growth. It's extremely high growth, and it could do stuff that is going to be very, very different compared to other stuff. And even the next pick, Redfin. I like this one too. I use it every day. I seeing it being around for a long time, and I think it's a good middle ground. And I said it won't be a Walmart or a Facebook in the sense it's going to have one of these crazy market caps or be like Microsoft and it's like, oh, Redfin is the number 5 company in the world all of a sudden. But I think it's going to be good. I think it's going to be sustainable, and I think it's going to maybe offer a dividend in there. But what I like about it, I definitely think it's going to be around with how real estate is. I use this every day, and I can see myself over the next 10 years, me using it more and more and more, as well as other people. And that's where I say, there is stuff on the back end that maybe the company doesn't manage it well as too. But I think the biggest thing is competition, is if somebody finds a way to get rid of Redfin, or they lose their competition, or if there's any problems in the future with it and people don't like it, it leads to a problem with real estate. Realtors get pissed off, who knows? But I like them. Again, I use it a lot. From a common sense perspective, it makes a lot of sense for me to hold this one and why I like it. And this is the one that I already own in my long-term portfolio. And I don't plan to sell this out for at least 10, 15 years. I'm going to hold it, and I will even add more when we create that portfolio. Then lastly, Spotify. I could see this being around for a long time or being absorbed. And why do I like it the most? I don't even use Spotify. That's kind of crazy. I use Apple Music, but that's what I'm saying. This whole streaming of music, this has already changed the music industry, but now as the music industry has already adjusted so much that streaming they found a way now, isn't it crazy? You remember you used to be able to download music now? Well, they found a way to let people get music for free. They couldn't stop the piracy, but they found ways to monetize it and offer it for free, and now let the labels and the artists make money. And now why I like it, it offers extreme value to the consumers and the artists especially, and the labels. So I like it especially because it's a good value for users but not investors, and that is a dynamic I like because it eventually will get changed. And again, like I said, I don't use it, I use Apple Music, but that's what makes me think it will be absorbed. So they have risks where they could run themselves into the ground, or again, a different way to listen and access music comes around, or again, Apple Music just says we don't even want to absorb you, and they crush them and people stop doing it. But at this point, I think it provides such a value to the people listening to it. Artists, if any, a lot of recent rappers and singers, they've blown up simply because of Spotify. You get into one playlist on there and boom, you take off, easy money. But yeah, those are my 3 picks. Those are ones we're going to go about. I will be purchasing these when we do it. I know I've been talking about this a long time. As I was like, well, I might as well start an account, show you guys how it's done, and just to even highlight day after day, little by little. You guys see we've been posting videos here. We're going to be around. I mean, time goes by faster than you think. I showed you that picture on Instagram. I don't want you guys to waste your time. I don't want you spinning your wheels, wasting money trading, going after YOLOs and this and that. It's fine to go do that, but only if you got a long-term portfolio. So let these get set up. I appreciate all of you guys. Thank you for watching this video. Thank you for watching all of the videos. You guys are the best. Drop your thumbs up on the video. Make sure you're subscribed, and I'll see you on the watch list tomorrow.